All right, so you've got a meeting coming up about maybe investing in NBCC, India Limited.
Okay.
And luckily, we've got this excerpt called Pasted Text that seems to lay out their current state and their future plans.
Mm-hmm.
From what I'm seeing here, it looks like they're really trying to make some big moves.
Yeah, NBCC is definitely aiming for ambitious growth.
Okay.
They're a public sector enterprise,
Okay.
meaning they're owned by the Indian government, but they're not content with just sticking to traditional construction projects.
Okay.
They're branching out into things like redeveloping stalled projects, managing real estate.
So they're thinking big.
Yeah.
But I've got to admit, I'm a little skeptical.
Okay.
They're talking about this aggressive expansion plan, especially with revitalizing these stalled real estate projects. They're even eyeing unused government land in places like Srinagar, Goa, and Hansi.
Right.
Those seem like risky bets, don't they?
That's a fair point.
Yeah.
It's one thing to have a vision, but quite another to execute it successfully.
Yeah.
The real estate market, as we know, can be incredibly volatile.
Right.
And taking on these stalled projects, well, there's usually a reason why they stalled in the first place.
Exactly.
Okay.
So what makes NBCC think they can pull this off?
Yeah.
I mean, are they just throwing darts at a board and hoping something sticks?
Well, their strategy seems to be twofold.
Okay.
First, they're focusing on acquiring underperforming public sector units, or PSUs that already own valuable land.
Right.
Think of it like a company sitting on a gold mine but not knowing how to dig.
Right.
NBCC comes and streamlines operations and then either develops the land themselves or sells it off.
Okay, so they're not starting from scratch in those cases.
Right.
But what about the stalled private projects?
Yeah.
That seems even trickier.
Right, those are riskier.
Yeah.
But they seem to be targeting projects in areas with high growth potential. Like those cities you mentioned, Srinagar, Goa, and Shansi, they're betting on the long-term development of these regions.
So they're playing the long game.
Yeah.
But are they being realistic? This document highlights a 15% jump in operating income, reaching INR 1,865 crores.
Okay.
And a 45% surge in profit after tax, hitting INR 124 crores.
Right.
Are these numbers sustainable, or is it just a short-term blip?
Well, on the surface, the numbers look impressive,
Okay.
but we need to dig a little deeper.
Okay.
It's important to look at these figures within the context of the overall Indian economy and the construction sector's performance.
So we're not getting too excited just yet.
Right.
But what about their margins?
Right.
They're aiming for a PAT margin of around 6-7% and an EBITDA margin of 5.56%.
Okay.
What does all that even mean?
Essentially, these margins tell us how much profit NBCC is generating for every rupee of revenue.
Okay.
A 6-7% pay-by margin means that for every 100 rupees they earn, they're keeping around 6-7 rupees as profit after taxes.
Okay.
EBITDA margin is similar, but it looks at profit before interest taxes, depreciation, and amortization.
Okay, so higher margins are better, right?
Yeah.
Because it means they're running a tight ship and squeezing more profit out of each project.
Exactly.
But are these targets realistic, especially with all these ambitious expansion plans?
That's the million-dollar question.
Yeah.
Construction is a notoriously volatile industry.
Right.
Projects get delayed, costs overrun, and competition is fierce.
So achieving those margins might be tougher than it seems.
Yeah.
Especially if they're taking on these riskier projects.
Right.
But let's move beyond the numbers for a second and look at some of their specific projects.
Sure.
I was particularly intrigued by this satellite township in Srinagar they're developing, worth a whopping INR 15,000 crores.
Wow.
It's a massive undertaking.
It certainly is.
Yeah.
And it speaks to their ambition and willingness to take on large-scale projects.
Okay.
But it also highlights the potential risks involved. A project of that magnitude in a region like Srinagar could face numerous challenges, from logistical issues to political instability.
All right. It's not just about building a bunch of buildings.
Exactly.
There's so many factors at play.
Yeah.
And then there's the Amrapali Phase 2 project tied to all those stalled real estate issues we talked about.
Right.
That seems like a potential minefield.
It does.
Yeah.
And it's a good example of the kind of complexities NBCC is wading into. They're not just a construction company anymore. They're becoming problem solvers, negotiators, and even, dare I say, social engineers.
Social engineers.
Yeah.
That's an interesting way to put it. But you're right. They're getting involved in projects that have a much broader impact than just putting up a building.
Exactly.
Yeah.
Think about the medical college in Parbani they're building.
Okay.
Or the test to treat Arogya Yojana for construction workers in Maharashtra.
Mm-hmm.
These are projects that aim to improve healthcare and worker welfare, which aligns with that growing emphasis on social impact alongside economic growth.
So they're trying to tick multiple boxes: profits, social responsibility, and even perhaps some political points with the government.
Possibly.
Yeah.
But it's also a smart business move.
Right.
Investors are increasingly looking at a company's overall impact, not just its bottom line.
That's a good point.
Yeah.
It seems like NBCC is trying to position itself as more than just a construction company.
Right.
They want to be seen as a partner in development,
Yeah.
a force for positive change. But can they actually pull it off?
Oh.
We'll dive deeper into that when we return for part 2 of this deep dive.
Okay. It's an interesting strategy trying to balance all of those things, but it's also a risky one.
Yeah.
Taking on these complex projects,
Right.
especially those stalled ones, could easily backfire.
I hear.
Yeah.
It seems like they're trying to juggle a lot of balls in the air.
Yeah.
And we haven't even touched on their real estate ventures yet. They pulled in INR 84 crores in sales during the first half of the year,
Okay.
which isn't bad.
Right.
They completed and sold out their Naroji Nagar project. And they've got others like Netaji Nagar and Sarojini Nagar in the works.
Oh.
But is this a smart move for them? Especially given the inherent volatility of the real estate market.
Well, it's a calculated risk.
Okay.
They're definitely trying to capitalize on the booming real estate market in India.
Right.
And they're not just building any old thing.
Yeah.
They're targeting prime locations in major cities.
Okay.
Leveraging their expertise in construction and project management.
So they're trying to create a premium brand.
Yeah.
Something that stands out in a crowded market.
Right.
But even with prime locations, isn't the real estate market inherently unpredictable?
It is. And that's where their experience with stalled projects comes into play.
Oh.
They're developing a knack for identifying undervalued assets, navigating regulatory hurdles,
Right.
and managing complex construction processes.
So they're turning lemons into lemonade, so to speak.
Exactly.
Taking these troubled projects and turning them into profitable ventures.
It's a high-risk, high-reward strategy.
Right.
But they seem to be developing a system for managing that risk.
Okay.
Of course, there's no guarantee of success.
Right.
But they're betting on their ability to identify opportunities that others might overlook.
And let's not forget about their interest in acquiring those underperforming public sector units with valuable land assets.
Right.
That could be a real game changer, couldn't it?
It could be.
Yeah.
But it's also a potential minefield.
Okay.
These PSUs often come with a lot of baggage, financial troubles, legacy issues, and sometimes even political interference.
So it's not as simple as just buying up these companies and flipping the land for a quick profit.
Yeah.
You've got to navigate a lot of complexity.
Exactly.
Yeah.
They need to carefully assess the financial health of these PSUs,
Right.
understand the potential liabilities they're taking on, and have a clear plan for how to extract value from these assets. It's a sophisticated game they're playing.
It sounds like it. And it requires a lot of expertise, not just in construction, but also in finance law and even politics.
You're absolutely right. And that brings us to a crucial point.
Okay.
While NBCC has a lot going for it, government backing, a strong track record, and a clear vision, they're also facing some significant challenges.
Like what? I mean, aside from the obvious risks associated with these ambitious projects?
Well, one concern is their dependence on government projects.
Okay.
While this provides a certain level of stability,
Right.
it also makes them vulnerable to policy changes or shifts in government priorities.
So if a new government comes in and decides to prioritize infrastructure over real estate development,
Right.
NBCC could be left high and dry.
Exactly. And then there's the issue of competition.
Oh, okay.
The Indian construction sector is incredibly competitive, with a lot of players vying for the same pie. NBCC needs to constantly innovate and differentiate itself to stay ahead of the curve.
They can't just rest on their laurels and assume that their government connections will always guarantee them projects.
Right. They need to demonstrate that they're bringing something unique to the table, whether it's their expertise in stalled project redevelopment, their focus on prime real estate, or their commitment to social impact.
It sounds like they're walking a tightrope, trying to balance ambition with prudence, government reliance with market competitiveness,
Right.
and profit generation with social responsibility. It's a lot to manage.
It is, and that's why it's so important to look beyond the headlines and really understand the complexities of NBCC's operations.
Yeah.
They're not just a construction company anymore. They're
Okay.
becoming a multifaceted conglomerate with
Right.
all the opportunities and challenges that come with it.
So it's a mixed bag, lots of potential, but also plenty of risks. What should our listener be focusing on as they head into that meeting about investing in NBCC? Yeah. What are the key red flags they should watch out for?
Well, I think the biggest red flag would be any indication that they're overextending themselves.
Okay.
Are they taking on too many risky projects?
Mhm.
Are they overpaying for these PSUs?
Okay.
Are they neglecting their core construction business in pursuit of these shinier ventures?
So it's all about balance.
Yeah,
Don't get seduced by the hype
right.
and make sure they're not biting off more than they can chew.
Exactly. And don't be afraid to ask tough questions.
Okay.
What's their plan for mitigating the risks associated with these stalled projects?
Right.
How are they ensuring that these PSU acquisitions actually generate value?
Mhm.
What's their strategy for competing in an increasingly crowded market?
These are all great questions, and I imagine their answers will reveal a lot about their long-term viability.
Absolutely. And speaking of long-term viability,
Okay.
we need to look at their guidance and outlook for the future.
Right.
They've set some pretty ambitious targets,
Hmm.
reaching an order book of INR 1 lakh crore by the year's end,
Okay.
aiming for at least 20% growth in execution in the coming years,
Wow.
and increasing the contribution of their real estate arm.
Okay, so big goals. Are they being overly optimistic, or do you see a path to achieving these goals?
Well, they've certainly got the momentum right now,
Yeah,
but can they sustain it?
that's the big question.
That is the question.
Yeah.
They've got a strong order book, they're actively pursuing new opportunities, and they've
Mhm.
got an experienced leadership team,
Okay.
but they're also operating in a very complex and unpredictable environment.
So it's not a slam dunk by any means.
Right.
There are a lot of factors that could derail their plans.
Exactly. The construction industry is notorious for its boom and bust cycles.
Right.
And the Indian economy, while growing rapidly, is also facing some headwinds.
So it's a bit of a gamble.
Yeah.
High potential rewards, but also significant risks. But hey, isn't that the case with any investment?
It is. But with NBCC, it seems like the stakes are even higher.
Okay.
They're betting big on their ability to navigate a complex landscape
Right.
and transform themselves into something more than just a construction company.
It's an intriguing story, that's for sure, and one that's worth watching closely.
Yeah.
But we've only scratched the surface of NBCC's operations. There's one more crucial aspect we need to address their strategic initiatives and investments.
Okay.
That's where things get really interesting, and we'll delve into that when we return for the final part of our deep dive. Okay, so we've talked a lot about their current performance
Right.
and those ambitious expansion plans.
Mm.
But let's shift gears now and dive into these strategic initiatives and investments they're making. This is where we see them trying to move beyond just being a construction company.
Yeah, what stands out to me is how they're doubling down on that idea of acquiring underperforming public sector units
Okay.
with those valuable land assets.
Right.
It's a bold move that could pay off massively. But it's also a bit of a gamble, wouldn't you say?
It does feel like a gamble, but a calculated one.
Okay.
They're essentially taking these companies that are sitting on prime real estate, but not doing much with it,
Yeah.
and trying to unlock that hidden value.
Right.
It's almost like they're playing a game of high-stakes monopoly, buying up properties
Right.
with the potential for huge returns.
I like that analogy,
Yeah.
but it's not as simple as just buying and selling.
Right.
These PSUs often come with their own set of problems, financial troubles, outdated infrastructure, and even political baggage.
Yeah.
NBCC needs to be very careful about which companies they target
Right.
and have a clear plan for turning them around.
So due diligence is key.
Yes.
They can't just jump into these acquisitions blindly.
Right.
They need to make sure they're not inheriting more problems than they can handle.
Absolutely. It's not just about the land itself.
Okay.
They need to understand the market dynamics, the regulatory environment,
Yeah.
and the potential liabilities they're taking on.
It sounds like they need a team of experts,
Yeah.
not just construction engineers,
Right.
but also financial analysts, legal advisors, and maybe even a few political strategists.
You're right. It's a complex game they're playing, but
Yeah.
it's also one with a potentially huge payoff.
Right.
If they can successfully acquire these PSUs, streamline operations, and either develop the land themselves or sell it off at a profit,
Okay.
it could be a game changer for their bottom line.
It's a high-risk, high-reward strategy,
Yeah.
and it ties into their broader goal of diversifying their portfolio, right?
Yeah,
They're not putting all their eggs in one basket. They're spreading their bets across different sectors, construction, real estate,
Right.
and even venturing into areas like healthcare and education,
Yeah.
building on those projects they've done with institutions like Ames and the IITs.
Exactly. They're aiming to be more than just a construction company.
Right.
They want to be seen as a comprehensive development partner involved in projects that have a wider social and economic impact.
It's a smart move, especially as investors are increasingly looking at a company's social responsibility and overall impact, not just its profits.
Absolutely. And from what I'm seeing, this approach seems to be working for them.
Okay.
Their stock performance has been solid, and analysts seem to be optimistic about their future prospects.
That's encouraging.
Yeah.
But as we've discussed, there are still a lot of unknowns.
Right.
Those PSU acquisitions are a big gamble. The real estate market is notoriously unpredictable, and the construction industry as a whole is facing numerous challenges.
Very true. It's too early to say for sure whether NBCC will achieve all its ambitious goals.
Right.
But what's clear is that they're not standing still.
Yeah.
They're adapting to the changing market, taking calculated risks, and aiming for something bigger than just being a construction company.
They're trying to become a force for positive change while also generating profits for their investors.
Right.
It's a delicate balancing act.
It is. And whether they succeed or not will depend on their ability to execute their plans effectively, manage risks carefully, and adapt to the inevitable challenges that lie ahead.
It's a fascinating story to follow, that's for sure. And for our listener who's heading into that meeting about investing in NBCC, I think the key takeaway is this. NBCC is a company in transition.
Okay.
They have a solid track record, a clear vision, and a lot of potential. But they're also making some risky bets.
Right.
So do your research.
Yeah.
Ask the tough questions.
Yeah.
And make sure you're comfortable with the level of risk involved.
Well said. I'd add that it's important to stay informed about their progress, monitor their financial performance, and pay attention to any news or developments that could impact their strategy.
Great advice.
Yeah.
This has been a deep dive indeed.
It has.
We've gone from their financial statements to their ambitious projects and their grand vision for the future. We hope this has given you a better understanding of what NBCC is all about and what to look out for as a potential investor.
Absolutely.
Thanks for joining us on this deep dive. Till next time, keep exploring, keep learning, and keep asking those tough questions.